Hey, what's going on, guys? This is Alex Cook. This video, first of all, Happy New Year. This is going to be my market preview video for first quarter 2021. So what this is, these are things that I'm looking at in the market. I'm not going to hit every single asset class because that would take too long. And also, I'm just one person. I think anybody that tries to speak too in depth on issues that frankly you don't know about, you're going to mislead people more than you're really going to inform them, because there's only really so much you can track. So if people ask, hey, what is your opinion on New Jersey municipal bonds? I mean, I have no opinion, because that's just not an asset class that I track. I don't want to claim to have knowledge on something that I don't. I'd rather be upfront and honest with you guys. So as always, it's not intended to be investment advice, because I can't tell what is suitable for who's watching. I can't tell who's watching, so you got to figure out your own risk tolerance and figure that out for yourself. So I want to start this by first asking a question, and that is, what would happen if the U.S. stock market, the S&P 500, what would happen if that suddenly went up 70% from its previous all-time high in the course of a month? Well, of course, it would be on the front page of every newspaper in the world. Not the business section. It would be on the front page. Okay, it would be impossible to not hear about this. Friends would be talking about it. You'd see it all over social media. Now, this is exactly what happened with Bitcoin over the past month. Now, granted, Bitcoin it's a much, much, much smaller asset class than the aggregate U.S. stock market as a whole. So not a complete comparison, but I do think it is illustrative that although we've seen Bitcoin go on a monster run, it is nowhere near the level hype that we had in 2017, when, again, it was almost impossible not to hear about it. So I will discuss crypto in this video. I want to open up with that because I'm first going to start broad strokes. Then I'm going to go through some asset classes. The first asset class I'm actually going to hit is bonds. I'm not going to talk about crypto first, but there is a method to this madness, kind of a sequence that I put together that will get you to the conclusions that I formed. Definitely curious to hear about your opinions as well, because I'm not married to my ideas. I want to make money. That's it, and that's all. So if I'm wrong, I want to know so I can adjust my trades accordingly as soon as possible. So let's talk about crypto for a second, though, before I crack into it. What was on this weekend's news? All right, it was not talking about the monster run in Bitcoin, except for I think I saw one blurb on the front page of Fox Business, but front page of the Wall Street Journal was talking about salad. I'm not even kidding you. Like the titled article was "The Great American Salad Revolution." Like, we have an asset class that used to be considered a joke, now 70% up from its previous all-time high in the 2017 bubble, and your top story is fancy restaurant salads, and Bitcoin wasn't even mentioned at all. So I thought that was a little curious. Point being is, well, surprise, surprise, don't always trust the media. I don't think that should be a shocker to anybody anymore, but I just want to throw that out there. But I also wanted to put out to illustrate that it's still an asset class that is not followed as much, which kind of makes me excited. I used to get, I used to feel, I guess you could say, somewhat upset when the media didn't cover things properly. Now, I take it more in stride. If you're a surfer, you can control what you do, but you can't control the waves. Look at it that way. And when you see stories completely get missed like this, well, hey, it's an opportunity to make money. It means there's market inefficiency. So broad strokes, again, not going to cover every single asset class, but what I first want to talk about is I want to recap what happened last year. So rewinding even further before that, March 2019, I talked about how the yield curve had inverted. I'll include a link to this, and I'll include it up top here on YouTube. You'll see it on I think they call it a card you can click on. I'll also include it in the text below for those watching on Rumble or YouTube Substack as well. I think a recession was likely going to happen no matter what, and COVID just drastically accelerated things. The reason why I think recession was going to happen no matter what is we started to see capital going to just dumb ideas. Like what great business really was started like 2018 or 2019? Like WeWork, maybe like yet another Tinder or Instagram clone. One of the guys that made a good point about this was Chamath. Peter Thiel talks about this too. It's like, how much tech investment do we really need in like a slightly better smartphone to take selfies with? I mean, my old smartphone is probably just as good. Okay, cool, it'll sell, but is this really a paradigm shift? We didn't really have paradigm shifting ideas. And eventually what happens is capital overheats, and things contract back in when debt cannot get paid back to investors. So I think something like that was likely to happen at some point, and COVID just massively stepped on the gas as far as the recession goes. I want to pull up a chart here. So this is from the JP Morgan Guide to the Markets. I'm going to put this up on the screen real quick. So I put this up here just to illustrate how bad COVID was. If you don't read the JP Morgan Guide to the Markets, I mean, you're definitely missing out. This is a great resource for a lot of raw data in visual form. Highly recommended. I always check it out once a quarter. They usually turn it out real quick, like first day of the quarter. But I mean, just take a look. Look at seated diners. Look at TSA traveler traffic and how it was, at the bottom. I mean, well, restaurants are entirely turned off. So that's an entire industry, the hospitality industry, that would just turned off. When you turn off entire sectors of the economy, it's impossible not to have a recession. Like you just can't do it. It's like you DDoSed the entire economy. Things have been picking up a little bit, but I want to show that just to illustrate just how bad things were. So what's going to happen, here's the broad stroke trends I'm looking at, is COVID, this will eventually end. Either a vaccine rolls out to mass capacity, either we hit some level of herd immunity. In Asia, things are pretty much opened up already. Part of that is they've dealt with this before. They've had SARS, they've had bird flu, so this is not their first rodeo. I mean, it's easy to kind of Monday morning quarterback, but this is not the first time that they've had to exercise this. It's not just an academic exercise to them. Hey, what are we doing in a pandemic? Like, no, they've actually had to rule this out before. And then there's another thing that no one wants to talk about, but again, I don't really care what people think, and that's obesity. And that is the reason why they did better than we did. So that gets you offended. You want to go on Twitter and start some hashtag. Okay, my name is Alex Cook. Okay, COOK. You want to start some hashtag? Spell my name right. All right, moving on. COVID's caused a lot of problems, but I think it has also massively accelerated some trends that were already in motion, particularly education, media, work from home, anything decentralized. Like work mobility has been drastically accelerated. So I think what you're going to see is that some big cities will no longer have the kind of monopoly that they had on high-paying professional jobs. You can now be, a service industry worker, a financial services worker or a consultant. You could pack up your laptop and be on the next flight to Las Vegas or Miami. And I think some of these cities, the Texas cities, Scottsdale, Arizona, are definitely going to stand to benefit. Long term, it may bring costs down in some of these more legacy cities, the New Yorks, the Los Angeleses, or maybe not. We'll see. But that is a trend that I don't think is going away. I don't see that trend going away. Now, all right, so now moving from broad strokes now to more investable assets. Bonds are basically uninvestable. Would you touch bonds right now? I certainly wouldn't at interest rates like this. Interest rates have been going down steadily since the 1980s. I'm going to pull up another chart for you. I have a paper in front of me just for me to reference. But if we take a look at interest rates and inflation, it's been going down steadily, interest rates since the 1980s. At what point does this end? At what point does it make sense for me to maybe lock up a 10-year note yielding less than 1%? If long-term inflation is 2.5%, because historically that's about what it is, you're taking a guaranteed loss in real purchasing power. Like, at what point does this continue to make sense? Now, some banks will have to buy bonds because there's certain statutory requirements for it. When it comes to treasury bonds. For regular people, I'd say maybe tips. I'd say maybe some types of floating rate. But beyond that, this will lead to my second point of stocks. Like, this is why people have been rolling the dice and buying stocks. Because look, at least maybe you get a dividend yield, and long term it's going to go up, it's going to go down, but long term stocks go up, and they are pro-inflationary, meaning inflation actually helps stocks rather than hurting it. Want to go over some of the asset class returns that we saw last year. So it shouldn't be too much of a shocker that small cap was the best performing asset class. That is 100% having to do with the rebound after March, so hopefully you guys bought the dip. This does not include cryptocurrency. That is an omission in this that I think is very notable. Cryptocurrencies are not rolled up into commodities, which is a poorly performing asset. I mean, no surprise there. We saw how oil actually went negative. that was one of the crazier things I've seen. I've seen some crazy things, but there was one trading day that crude oil actually went negative. Real estate was by far the worst performing asset class in 2020. Again, this should not be a shocker. You've seen the vacancies. I don't see that stopping anytime soon. Residential will be okay because people still have to live somewhere. Some cities, though, residential get beat up as they move out. When it comes to Class A commercial, though, I mean, I'll talk about real estate a little bit later in this presentation, but you could not pay me to buy Class A commercial right now in some big cities. I don't see that as a good idea. All right, let's take a look at U.S. stocks. So this is S&P 500 when you look at it in forward PE. Now, we are now above the previous all-time high, which was before the crash in March. And let's think about that a little bit. So earnings are down. I'll flip ahead to earnings. Okay, earnings are down. Okay, they're not expected to get back up there until Q1 2021. So we're not going to have that report till around April. Earnings are down, yet stock prices are up. Okay, this is all multiple expansion, which has driven stocks up. Higher PEs, and what is that? Well, it's because of what's $1 trillion, couple $1 trillion between friends, all the money that we've been printing. You made bonds basically uninvestable, so people are rolling the dice and buying stocks. Now, average bear market is about 22 months. Let me show you this slide. A lot of numbers on it, but the point is, average bear market is about 22 months, and we've already exceeded the previous market high. So I would not be too shocked if we see a market correction at some point. If prices start getting ahead of earnings, that would not shock me because, otherwise, this would have been one of the fastest recoveries of all time. Look, it's a duration of this bear market 1 month. Do we honestly think that the economy, the economy's, it's better than it was in March, but is it going as gangbusters as it was in 2019? Clearly not. And the stock market is up since then. That does not logically jive. This has to do more with central bank monetary printing than it does with economic fundamentals. So it would not be a huge shocker for me if we saw a market correction to some degree. I want to talk about sectors, though, that interest me. One is healthcare. COVID is the easy answer to it. But secondly, just broad strokes, the baby boomer generation is getting older. I want to talk about technology, though, because a lot of people way smarter than I am are very bullish on technology right now. Wall Street Playboys loves technology. I can definitely see where they're coming from. But this is a space where I'd want to be a bit more selective. I don't know if I would just buy the XLK or the XLC. And I'll tell you why. The reason why is, just kind of look what's inside these ETFs. XLC, is Activision, the video game company, is that really telecom? Or, Visa is inside the XLK. At one point, I swore this is classified as financial services. Correct me if I'm wrong. It would make sense to me that's classified as financial services, but I saw it in the XLK. That doesn't quite make sense to me. And do I necessarily want gigantic positions in Apple or Facebook? Yeah, I know they've done phenomenally well, but what do I think about them going forward? I don't know. They have a lot of money that they could throw at problems to continue to innovate. I just don't know if they will. And I'll tell you why. So Apple used to always come out with game changers. The iPhone was a game changer. It completely changed how people viewed smartphones. Smartphones were around before then, in terms of the BlackBerry, but this is what made smartphones popular. Or the iPad. I was totally wrong on the iPad. I made a call a long time ago that I thought the iPad would not do well, and that was completely wrong. The iPad did very well. Totally changed the game on tablets. I don't really see them coming out with game changers now. Facebook too. What is kind of the marginal next step for them? Instagram's cool right now; it's a hot platform. I'm not saying Facebook goes away. I'm not saying Apple goes away. I just don't know quite where they move the needle forward. And they have a ton of money they can throw at the problem. I just don't know if they will. So that's why I want to be a bit more selective in this space. Who I would look to is I would look at what is Peter Thiel doing. I would look at what is Naval Ravikant doing. I'd say what is Chamath doing, because these guys really seem to get it. They're looking for those game changers, and their track record is pretty phenomenal too. So I would look to kind of what are these guys doing, and I would try to find inspiration from these ideas. I would probably do that more so than just blind buying an ETF. I mean, do what you want. I'm just throwing out my ideas. Again, take into account your own risk tolerance, do your own research, but just speaking from my perspective. Some technologies that I am interested in, though, is I am very interested in 3D printing. I am very interested in censorship-resistant forms of communication, with what we've seen a lot of social media companies doing. I am very interested in decentralized finance as well. So I think players in this space might be interesting to look at. So just food for thought. I'd keep that in mind. Would I necessarily buy legacy tech companies at this point? I don't know. Maybe yes, maybe no. Maybe I just have an equal weight relative to the S&P rather than be overweight. But just my opinion. Now, one thing I want to talk about that I don't quite have a strong view on, but I want to know what you guys think, is emerging markets. I know the easy answer would be for me to just say, oh, China, India, super million times growth or whatever. But I don't know if I'm willing to say that at this point. Now, yes, some of these countries have reacted faster to COVID. And if you look at Wuhan, they're largely entirely open now. I mean, they had big New Year's parties. I mean, you can see the stuff all over social media. So they're pretty much back to normal at this point. They're having music festivals. Like, they're not doing social distancing anymore. Like, they're back to normal. Like, they are full up online. So you could say, well, this is good for their manufacturing. This is good for their economy. But here's the counter argument is I wonder if this return to globalism is really going to be a thing or not. I mean, look, this is just my personal opinion, but I could tell you that after COVID, after all this, I am personally more leery about investing in China. Okay, just my opinion. Again, if you want to start some Twitter movement, spell my name right. But, I didn't used to think this way, but I now kind of think, look, there's some things that are more important than just money. And it's not just me thinking it. I know it's some other people in finance as well thinking it too. I wonder if we're going to see more of a decoupling and more reshoring when it comes to manufacturing. Now, I could be wrong, but these are the things that I'm weighing, that I'm a little conflicted in. So I want to know, what do you guys think about emerging markets? And I'm particularly curious, what do you guys think about the Middle East, and emerging markets wise? And what also do you think about Russia? Because I think kind of the easy answer would be, well, if oil goes up or down or natural gas goes up or down, then this happens to Russia. I think that's kind of the easy answer. That's the consensus answer. And I kind of like to go against the consensus, because I found when 99 people out of 100 are saying one thing, chances are when it comes to finance, there's usually more to the story than that. So I am curious what you think about Russia. All right, so let's talk about real estate for a little bit. I want to pull up this chart showing the Federal Reserve balance sheet, and I'll talk about this too when I get into crypto. This is exactly why interest rates are so low. I mean, we thought we added a lot to the balance sheet after 2008, and we have completely stepped on the gas even more. I mean, what's a couple $1 trillion between friends? And the thing is, it's not just us. It's easy to bash the Fed. It's not just us. It's every central bank in the world that is doing the exact same thing. This is why I'm bullish on crypto. I'll get to that in a little bit, but I want to hit real estate because this is why mortgage rates are so low. Now, cities that I'd be looking towards might be Miami, some of the Texas cities, Scottsdale, Arizona, Las Vegas, because I see these as lower cost of living cities that are still desirable. I live very close to Austin now, love it here. With work from home, I think the monopoly that some large cities had on high-paying professional services jobs, like consulting, accounting, finance, that's not necessarily going to be as much of a thing anymore. You can just pack up your laptop and go wherever you want. I mean, you could go to Alaska, you could go to, wherever. I'm not saying you'd want to, I'm just as an illustrative example. So I think some of these cities that still have a, attractive lifestyle, but, just frankly are better governed, I think that's a bullish case for them. Here's another trend that I find interesting is a concept of intentional living. These are the more, I think they call it like the work-play type communities. Examples would be like the Domain in Austin, like these mixed-use type communities. Because, one of the things I kind of thought about is when I was living in Dallas, you have your boxy sort of apartment, your modernist apartment, and you could pretty much spend your whole life in that apartment. You could buy all your stuff on Amazon, you could watch Netflix shows all day, and you don't really need to leave to interact with anybody. And that's very depressing, I think, and I think a lot of people sort of feel that way. So I think you may see a rise of more intentionally social communities And I'm very curious to see where this trend goes. I see a lot of people way smarter than I am when it comes to real estate talking about this. So that is something that I'm curious to learn more about, this intentional living concept. That is something I would be bullish on. Now, something I'd be bearish on, Class A downtown commercial, no, hard no. Now, maybe some rare isolated opportunities, but I know a number of companies that they are now 100% work from home. Even when COVID ends, they realize, hey, why are we spending all this money on a fancy office when we've been getting on just fine working from home? We might as well just save that money, give it out in bonuses, or do whatever, reinvest in the business. We don't necessarily need this physical space. Some companies will need it. They will want a physical space to have meetings and so forth. Maybe co-working might be an interesting kind of compromise. Just, don't hire that WeWork guy to do it for you. But I'd also look at some more esoteric things as well. Maybe industrial warehouses when international trade starts ramping back up again. Maybe things like cell phone towers or data centers. Again, like real estate, there are some very non-traditional types of real estate as well that I'd say, maybe there may be some opportunities there. All right, crypto, this is probably what you guys came for. I'm going to pull up the slide again on the Federal Reserve balance sheet. Yeah, that is pretty insane. We thought it was a great monetary experiment after 2008, and we ain't seen nothing yet. It's just kept getting bigger and bigger. So hype on crypto right now is small, but it's growing. Again, I talked about the Wall Street Journal's lead story this weekend on the front page of the most important newspaper in the United States, if not the whole world, is salads. That's what we're going to talk about right now is salads. Seriously, if I wanted fake news, I just go to BuzzFeed. I'm paying you guys for this. I got a subscription to hear about this. Seriously. Okay. Point being, the hype right now is small, but it's growing. So I want to pull up this chart. This is Google searches for Bitcoin, buying Bitcoin. You see it trending up a little bit. We're nowhere near 2017 levels, but it is creeping up there a little bit. I think this hype will continue to grow, just driven by the price. So unfortunately, because of that, we're going to see all the idiots come out too. We're going to see the internet marketers trying to sell their courses. Just stay away from that. The random crypto experts on Instagram with the sports car and the girls and the million laptops or the million monitors with a bunch of random charts on it. That kind of nonsense will come back, just take it in stride. And frankly, this is what steered me away from crypto for a long time because I just saw all the scammers and just took that as the whole space. When no, there are some serious players in it. There is a serious reason for crypto, but yeah, we'll see the idiots come out there too. What I would say though is the business world likes crypto. When you look at people that actually are running businesses, like the CEO of MicroStrategy, who doesn't like crypto, it seems like, is theory world. Not the business world, but the theory world. Because the book on crypto has not yet been written. So some economists, I'm not trying to bash on anybody, but I just say, hey, just because you're right on 2008 doesn't mean you can just run your mouth off. I'll put it that way, Ariel Rubini. But yeah, look, the book on crypto has not yet been written. And yes, true, you cannot value it with traditional discounted cash flow. But I also don't think that just means it's inherently worthless, because you could say the same thing about oil or timber or any other type of commodity, and that's just not true. You could say the same thing about U.S. dollars or euros or anything else. And DCF, look, all models are wrong. Some models are useful, and I'm not about to say, oh, it's a game changer. Traditional valuation metrics don't work anymore, because that's when you're always in a bubble. But I'm just saying we're kind of in a new territory, and I don't know what I'd call crypto. I don't know if I'd call it a currency. I don't know if I'd call it a precious metal. I don't know if I'd call it a commodity. So the only thing I think I really can call it is crypto. It's a new asset class entirely. This asset class is not going away. We got to learn to live with it. And again, this is not going away. If anything, it's just going to keep growing. It'll eventually hit a bubble. It'll eventually crash at this point, because that's usually what it does. It'll get overinvested and then it'll get underinvested. But right now, I still think we're on the way up. So other opportunities and this is going to be kind of a downer, but it just has to be said, is I would suggest looking at personal security and self-defense. So I got to say it like it is. I'm not just going to say everything is going to be great. It's all sun and roses. I do see rising crime and instability. And this is why I'd say there may be some business opportunities in the space of personal security and self-defense. Lack of trust in institutions, whether it's the media or whoever, academia, I mean, local governments, it's at an all-time high. And I'm not endorsing that. In some cases, yeah, the media's completely lost its trust. I mean, I'm not endorsing like any kind of crazy activity or anything, but this is not a good set of circumstances to have stability. So I think there may be some business opportunities in the space of personal security and self-defense. And I think that the approach of some in the media to just yell louder and to say anyone who disagrees is conspiracy theorist, I mean, it's not working. You see that reflected in opinion polls. I think we may be in for a rocky road this year, definitely this quarter, starting it out. So, long video. This is probably one of the longer videos that I made, but it's a big topic to talk about. It's Q1 2021 and also kind of general themes for 2021 as a whole. I want to hear about what you think. Again, this is a longer video. Have a lot of thoughts, but it is a big topic to talk about. So, safe investing to all. Hope you guys had a good new year. Stayed out of trouble. Let me know what you think. Hit subscribe, and thanks for watching.